Hello and welcome to Money Markets and More with me, Dominic Frisby, and I'm back from Miami. What a few days I had there at the Bitcoin conference. What a city. Dinner, don't want to name drop, but I had dinner at Michael Saylor's house one night. I was hanging out with Robert Kennedy Jr., enjoying the wisdom of Michael Lewis, and I'm going to do a video about it all at some point next week. I haven't kind of written it up yet. But I suppose the short of it is this: I remain a happy holder of Bitcoin. Now today I'm at Cliveden House. There it is in the background, the magnificent Cliveden House, where all the cool political intellectuals hung out in the 1920s and the 1930s, and it's such a splendid place. I wanted to put together a video, but I didn't have anything prepared, so I thought I'd give you some notes from a lunch I had last week with a resource investor, of whom I think rather a lot. He's made a lot of money, more than I have, and I thought that my notes from that lunch might be of some interest to you. So here they are. First up, we both agree that the US dollar has made a low. It's going higher. You might have seen my piece on it from a few weeks back. My concern that it was making a low, and it seems to have. And so what are the implications of that? More pain for metals and mining stocks, I'm afraid. It's not going to be great for the portfolio. That's the biggest implication. Number two, we don't think that there's going to be a war, and by that we mean an all-out war between the US and either Russia and China. That doesn't mean that we see an end to what's happening in the Ukraine, but just not all-out war. By the way, Robert Kennedy gave a talk at Sailors about the war, and what he had to say about fiat money and war, it was like listening to Ron Paul or someone talk, but I'll have more on that later in the week. Proxy wars are a different kettle of fish, by the way. Number three, rare earths are overcooked. My friend's Australian. Apparently there's been something of a mania for rare earths out there. It kind of passed us by a bit in the UK, but he thinks it's done. Lithium is not done, and I sort of said a few weeks ago that the lithium bull market is over, at least for the time being. I said that in February, I think, and I'm now starting to think there might be a bit of life yet in the old dog. It's rebounding, and I'm sort of largely thinking that because of what I've seen happening to Andrada, which is a company I originally bought as a tin play in the Substack portfolio, but it appears to have made a major lithium discovery, and it could prove the company maker, but a lot of good things seem to be happening there. Number five, we both like oil, but there's a shortage of good places to invest with oil, and my friend really likes small caps, but I tend to favour slightly bigger caps with oil. But it's kind of been grinding lower and lower, but the long-term fundamentals that we're consuming more and more of it, but investing less and less in producing it, remain in play. That's probably why there's so few ways to play it, and I think every portfolio should have some oil exposure in it. As I say, my buddy likes tiny caps, and finding tiny caps in the oil space is hard. And that said, the mid and large caps are easier to find. He is super bullish on gold. I'm a bit on the fence. And let me just clarify, I'm a massive gold bug, as I'm sure you know, and everyone should own some gold, but my enthusiasms are just a bit tempered in the short term while the US dollar's rising. But number seven, that makes non-US dollar producing countries look very interesting. If the dollar is rising, profits go up on gold produced in countries with weaker currencies. So that's good for places like Canada. Number eight, we didn't even talk about crypto, which probably means it's closer to a bottom than a top. You don't really need an explanation about that. And I'll have more on Bitcoin, as I said, later in the week when I do some notes on Miami. And finally, number nine, house prices. They're stubbornly hanging on. You never bet against UK property. It defies, they might be down a little bit, but it just defies everything. And as I say, high prices are a function of fiat money, so they're kind of inevitable. And even with higher rates, prices are sort of holding on. Will UK property ever properly correct? Who knows? Maybe the cycles guys are right and we'll have to wait until 2025. the cycle low. Maybe rates need to go a bit higher, and with inflation still at 10%, I guess they might have to. Anyway, thank you very much for watching. I hope you enjoy this. Isn't it beautiful, Cliveden? I'll be back with another video very soon. This is the place of the Profumo affair. People did stuff in style in Victorian times. Imagine living here.